Good morning, everybody. It's Tuesday, July 30th, 5:25 a.m. Central Time. Grain markets are lower this morning. December corn futures down 3.5 at 408 and 3/4. November soybeans down 12 and a quarter at 1027 and a quarter. December Chicago wheat down 10 and 3/4 at 544 and a half. December Kansas City wheat down 15 at 554 and a quarter. December spring wheat down 10 and 3/4 at 598 and 3/4. Start off with the crop ratings.
U.S. corn conditions improved slightly last week. The crop was rated 68% good to excellent nationally as of Sunday, compared to 67% the prior week. The rating was higher than the trade expectation of 66% and was the best for the week since 2020. States with a good to excellent rating of 70% or below include Michigan, Minnesota, Ohio, and Wisconsin. USDA estimates that 30% of the crop is in the dough stage versus 17% last week and 22% on average. U.S. soybean conditions were reported at 67% good to excellent nationally as of Sunday versus 68% the previous week. The rating matched the trade expectation and was the best for the week since 2020. States with a good to excellent rating of 65% or below include Michigan, Minnesota, Ohio, and Wisconsin. The USDA estimates that 44% of the crop is setting pods versus 29% last week and 40% on average.
These are very, very strong corn and soybean ratings. 6% above average in corn and 7% above average in soybeans. To zoom in on corn ratings, it's not totally normal to see ratings improve this time of year. It's much more normal to see ratings deteriorate as harvest approaches. A lot of traders and analysts use the crop ratings to develop yield projections and yield models. And based on the crop ratings right now, people who do that sort of thing are eyeing above trend corn and soybean yields. The corn yields that I've seen tossed around based on the ratings are in the 182 to 185 range nationally, which I know is not something that you guys want to hear necessarily. Those are not my opinions. That's just what I'm hearing. In soybeans, I'm seeing numbers 52 bushels per acre, which would be close to trend, up to as high as 54, 55. Depending on who you want to listen to. Now, I'll be the first to admit that the crop ratings are flawed, but just to give you an insight into the mind of traders and what's being kind of tossed around within the industry, that stuff appears to be very real. In today's premium video, I'm going to do a balance sheet rundown. We're going to punch in some higher yield numbers and also fiddle with the demand stuff a little bit based on what we know and my opinion of it admittedly, and try to see what these balance sheets could ultimately look like. What's a more realistic view? What about winter wheat?
U.S. winter wheat harvest is ahead of schedule. The crop was 82% harvested nationally through Sunday versus 76% the prior week and 80% on average. The trade had expected harvest to be 83% complete. The U.S. spring wheat crop was rated 74% good to excellent nationally compared to 77% last week. Declines were noted in Idaho, Montana, North Dakota, and Washington. Improvements were noted in Minnesota and South Dakota.
I suppose the decline in spring wheat ratings is noteworthy, but 74% good to excellent is still very, very good. And it's about as good as you're going to see this time of year. So the Wheat Tour a week or two ago told us that the crop was good. The crop ratings are strong. We have no reason to believe otherwise at this point.
Parts of the central U.S. Corn Belt saw 1 to 2 inches of rain over the last 72 hours. Sections of Iowa and Illinois caught the lion's share of rainfall over the last 3 days. Amounts up to 3 inches were reported locally, although many areas saw around 1 to 1.5 inches. Temperatures are slated to run above normal throughout the central U.S. this week. Still, the extreme heat will occur mostly west of U.S. corn and soybean areas, with the exception of Kansas and western Nebraska. Cooler than normal temperatures are slated to arrive in the Corn Belt around August 9th. The 9 to 14 day period may include below normal temperatures for most of the Corn Belt.
The forecast over the last few days hasn't really changed. We saw the big shift from Thursday into Friday last week where they took this heat and they pushed it west and they pushed it south with regard to the forecast. And now the models appear fairly confident that around day 9, I think like August 9th or 10th, ballparkish, is when you're supposed to see these cooler than normal temperatures emerge in the central and northern parts of the Corn Belt, some far southern areas of the Corn Belt, like if you want to call Missouri or Kansas, parts of the southern Corn Belt. I suppose that would be maybe an exception where you're going to be above normal. Rainfall, I suppose, forthcoming is considered to be adequate. It's broad enough It's not going to catch far western areas, and it's not going to catch the plains. But I feel as if the trade believes that this is adequate. You got to remember, we don't really have drought in place anywhere aside from eastern areas, parts of Ohio. And then you get into like North Carolina and Virginia, places like that. Yeah, it's really dry, and they're going to have some crop issues there. Absolutely. When it comes to the heart of the Corn Belt, the heart of the Midwest, you don't have a soil moisture problem right now. So the trade, again, views this as all being fairly benign to negative with regard to prices.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
That a lot of people click off when we do our little ad read every day.
You think they do?
Oh yeah, because I see the YouTube statistics, and it's like the average view time is like 6.5 minutes, and that's right around when we get into the ad read. We do the ad read, guys, because of this. Mackenzie, I've asked you this question before. I'll ask you again. What percentage of the population cares what corn prices do on a daily basis?
I think it's like 10%, right?
No.
Okay, was it like 1%?
It's like 1/100th of 1%.
Okay,
of
sorry.
People care what corn prices do on a daily basis. So we wake up at 4 o'clock in the morning and put this stuff together every day. We're never, ever, ever going to make money off YouTube because we have 15,000 subscribers,
Yes.
and we have about the same amount of people that listen on the podcast. So between those two entities, that's pretty big for agriculture, for our audience. That's pretty big, but it's tiny, tiny, tiny in the grand scheme of podcasts and social media. We don't run ads in the podcast, so we make $0 off the podcast. YouTube paid us $952 last month. That's what we made. So we need to run our ads. We need to do it, or else this channel doesn't happen. So if you don't like the ads, I'm sorry, but we're going to run the ads because it's the only way we're ever going to do this. It's never going to work any other way. Anyways, to get back to business here, Chris Barron was out on the yesterday. Make interest rates work for you. This high interest rate environment presents a lot of challenges for farmers, but it can present some opportunities also. The high interest rate is definitely an overall negative, but there are some things you can do to try to make this stuff work for you. Chris made a really, really great spreadsheet available where you can take your grain that's being stored as an example and take the interest that maybe you're paying on that, and then kind of contrast that with, hey, what if I took that cash and threw it in a savings account at 4 or 5%? There's a lot to this. This is a good video. This is, again, what I call hardcore grain marketing information. Highly recommended. Go to standardgrain.com, sign up this morning. It's a $50 per month subscription. You can cancel it at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Give that deal a shot this morning, guys. I'll forward you a copy of this morning's email, which includes the 6 most recent premium videos, along with Chris's spreadsheet download from yesterday.
Argentina's wheat crop may be in danger due to freezing temperatures and drought. According to the Rosario Grain Exchange, temperatures as low as 25 degrees Fahrenheit were reported on Monday in the northern region of Buenos Aires. The region is also dealing with a severe drought. July was the driest month on record for the area in almost 6 decades. Earlier this month, because of the drought, the exchange cut its forecast for planted wheat acres by 2.9% to about 16.5 million acres. The unfavorable growing conditions have resulted in uneven plots and have caused seedlings to die. The forecast is calling for rain in the coming days, but amounts are expected to be limited.
Sometimes I throw a story in here because it doesn't matter, but because I saw it circulate in the wires or wherever as being a possible reason for activity in the market. Argentina is 2% of expected global wheat production. You're talking 18 million metric tons out of a global crop that's expected to be 796 million metric tons. So Argentina could lose a third of its wheat crop, and I don't think it makes one lick of difference at all. So I threw this one in today because it's a non-story, but I saw it being advertised as a story. And the long and short of it is it just doesn't really matter.
U.S. corn shipments were strong last week. USDA reported that 42 million bushels of corn were inspected for export during the week ending July 25th. The print was near the upper end of expectations and also up 6.8% from the previous week and up 97% compared to the same week last year. Soybean shipments exceeded pre-report expectations at 15 million bushels. The print was up 19% compared to the prior week and up 21% versus the same week last year. Wheat shipments were reported at 16 million bushels, up 64% from the previous week, but down 26% versus the same week last year.
We've only got 4 or 5 weeks left in the marketing year. Corn shipments have been contra-seasonally strong, and they are on pace to hit USDA's target, which was revised higher recently, as a matter of fact. Soybean shipments were okay. I have no issue here. The issue, again, when it comes to exports, is the new crop book of sales for both corn and soybeans, which is not very good. Prices are getting a little bit more competitive. Corn has been competitive for a while. Soybeans are getting closer to being competitive versus Brazil. So lower prices should generate demand. It's unfortunate that we are as cheap as we are, but we may need to get cheaper before we really find it.
Former U.S. President Donald Trump is the pro-Bitcoin candidate this November. If elected, Donald Trump intends to maintain the government's current level of Bitcoin. Trump made the announcement at the Bitcoin conference in Nashville this weekend. He also pledged to make America the world leader in Bitcoin and other digital currencies. The U.S. accumulates Bitcoin by seizing assets from financial criminals. Currently, the government auctions off Bitcoin and other cryptocurrencies, causing crypto prices to fall. Some had expected Trump to announce plans to create a Bitcoin strategic reserve through large purchases of the cryptocurrency.
I know most of you guys are going to say, "Oh, Bitcoin's nonsense," whatever. Guys, this is the front runner in the presidential election who is endorsing Bitcoin, which is something that 5 years ago would have been absolutely unheard of and insane. The launch of the Bitcoin ETFs on Wall Street, they were the most successful ETF launches in the history of Wall Street. So this is getting more and more real. So Trump and Vance are both on board with this. Trump, I think it was RFK Jr. was on somewhere, and he said that Trump actually is going to make an announcement and say that he's going to try to have like a reserve and actually build it rather than sell off what they've accumulated. So it's interesting stuff. Bitcoin prices rallied to almost 70,000 right after Trump spoke here in Nashville over the weekend, but they declined a little bit since. So we've been kind of floating around all-time highs for a while now. What did cattle do yesterday?
It was an ugly day for cattle futures yesterday. Feeders were down 225 to 352 lower. Live cattle were 77 cents lower to $1.75 lower. Box beef had a positive day yesterday. Choice ended the day at 314.81. That was up 104. Select ended the day at 301.52. That was up 406.
U.S. dollars flat this morning. Stocks are up just a little bit. S&P's up 11. Gold's up $9. Crude oil pretty quiet, down 13 cents. And the September WTI at 75.68. Have a great day, guys. We'll talk to you Wednesday.